Markets powering higher today. Record closes for the Dow, the S&P 500, and the Russell 2000. 52-week high for the Dow Transports. Let's talk more about these record-breaking markets as we head into 2026. Joining us now, right here on set, is Stephanie Guild. She is Chief Investment Officer at Robinhood. It's great to have you. Welcome.
Thanks for having me.
All right. Stocks at record highs. What do you think?
Well, I'm a little worried about the S&P 500 from here. I do see it going up a little, into 2026, but not by as much. I actually think more of the action is going to be below the largest names, and we've started reflecting that in Robinhood Strategies, which is the portfolios we manage. If you look at since October 29th, the top 100 stocks performing this year, return-wise, only 41 of them, or actually 41 of them, I should say, have a negative return since October 29th. And they haven't really rallied back since we had that pullback. So I actually think that's when the rotation really started. And that's when I think, we started owning, we've had things like regional banks, for example. Consumer names is really the other thing that we're starting to like as well.
Interesting. Well, we've got Broadcom earnings are out. We're going through those results right now. We'll bring them to you momentarily. In the meantime, it does feel like investors have been focused on two things and only two things. And that's been the Fed and AI. And of course, we're waiting for the next read on AI with Broadcom right now. But this idea of a rotation and a broadening out of the market, what's propelling that? And as we do see the shift out of AI, does it have legs here?
I think it does, because you have the Fed that just cut, and I think they'll cut again in January. I know that's a low odd right now. I do agree with them that it will probably be at 3.5%. I think the bond market is actually telling you that it's going to get to 3.5%, because you can see that in the curve. And I think that's going to help consumers somewhat. Obviously, the Fed is also starting to buy treasuries, although on the short end. But I also think all year long, we've been investing alongside, or at least in alignment with, fiscal policy. And I actually think 2026 is going to be a fiscal focus on the everyday person, on the consumer, because you do have midterm elections coming. And so I think there's going to be a reason for people to start to feel better actually about their economic, how they feel about it in general. And I think that's going to help retailers a little bit. And they're all down a lot. So they're all really attractive from a valuation perspective.